The US market records its worst week since March, even as stocks surge on Friday, led by rallying shares of Apple. Jobs data for April, meanwhile, comes in stronger than expected. Treasury Secretary Janet Yellen warns of a steep economic downturn in the US in case the debt ceiling is not raised. Berkshire Hathaway CEO Warren Buffett says the banking sector could face more pressure but sees no danger to deposits. Also warns of some struggle in commercial real estate as a result of higher interest rates. On the US dollar, the Oracle of Omaha says he does not expect it to be dethroned as the world's reserve currency anytime soon. Stocks in the Asia-Pacific open mixed, while the SGX Nifty is indicating a higher start for the Indian market. Coal India reports a mixed fourth quarter as revenue growth beats estimates but higher wages hurt margin. Britannia delivers a solid fourth quarter as gross margin hits a record high, while Marico reports inline set of numbers, while other income aided the bottom line. In key earnings to track today, agri-chemical maker UPL will report fourth quarter numbers. From the broader market, also watch out for earnings from Pidilite and Mahanagar Gas. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a fresh new week, Monday morning, and it's a 5-day working week as well after a long time. So we have to catch up on a lot that came over the weekend. But first up, let's take a look at what the Asian markets are doing. Well, it was a strong handover that we got from the Wall Street. Today, Asian markets are largely mixed, but largely on the higher side as well. So Hang Seng is higher in trade right now, up around 107 points. We have Taiwanese index, which is up 113 points. So going good for the Asian markets overall. We have Nikkei, which is trading in the red, down 0.5%. Straits Times is down 0.3% as well. So yes, a mixed picture, but the SGX Nifty, that'll come up for you on the screen, and that is indicating that start for our own markets could be in the green today. A 31-point uptick is what the SGX Nifty is indicating after that weak trade that we saw in Friday's trading session. But let's move on, talk about the US markets now. Wall Street ended Friday's trading session higher, with the Dow Jones and S&P closing nearly 2% higher, while the tech-heavy Nasdaq outperformed, finishing over 2%. Wall Street rebounded even as April's jobs data came in stronger than expected, indicating a resilient job market. The U.S. economy added 2.53 lakh jobs last month against an estimated 1.8 lakh. Despite the last week's surge, Dow Jones and S&P 500 logged their worst week since March. The Nasdaq, however, saw a slight gain of 0.07%. Meanwhile, U.S. Treasury Secretary Janet Yellen has warned of economic chaos until the debt ceiling is raised. She cautioned that failure to raise the debt ceiling could result in a steep slowdown and a constitutional crisis. Okay, all right. That is the word coming in from Warren Buffett. Some golden words there, but we'll keep getting your excerpts of that conference and the conversation that he had. But with that, we'll move on because this is a global market action. How will these overnight cues impact our own markets? We have our research team joining with just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Hi, thanks for that, Sonal. Well, yes, on Friday's trading session, the markets did record what was the biggest single-day fall in 2 months as HDFC stocks fell sharply. There was the MSCI rejig news, which led to around a fall of 6% each for both the twins, which was the biggest that we've seen in the past 3 years. But overnight, or rather over the weekend, we've seen the Dow jump 500 points as regional banks and Apple shares surged on Friday's trading session. And you were talking about the April jobs data, which was better than expected. So the US economy is still doing well despite 13 rate hikes which have come through. So the US economy added 2.53 lakh jobs. The street was anticipating anywhere between 1.5 to even 1.8 lakh jobs in terms of an addition. But the likes of Goldman Sachs have said that they expect a pause from the Fed irrespective in June, despite the strong jobs data, simply because of the number of rate hikes which have already taken place. Asia is currently mixed, as you mentioned. We have SGX, however, which is indicating a bit of a positive start. Now, Brent crude is the other factor to watch out for because it closed around 5% lower last week. It was the third straight negative week for Brent crude. Now, on a larger scale, what we need to watch out for was that despite Friday being a negative session for us, 35 of 50 Nifty stocks recorded gains last week on a week-to-date basis. The likes of Maruti, Asian Paints, Titan, they all were top gainers. FIIs have been net buyers throughout last week, and that gives you an indication in terms of the inherent strength or the underlying strength that we're seeing in terms of participation at this point in time. Earnings wise, we have the likes of UPL, Canara Bank, Exide, Happiest Minds, Pidilite, Mahanagar Gas, all of these stocks to watch out for in trade today.
That is a long list, so we'll continue that, Ekta. Thank you so much for that, and go across to Surbhi, who will list out the other stocks we'll be watching out for in today's trading session. Hey Surbhi, good morning.
Hi, good morning. Thanks for that. So quite a few results to track which have come over the weekend. Let's start with Coal India first. When the revenue was better than the poll, it came in at 38,152 crores, but margins were compressed due to higher wages. Margins came in at 18% versus a poll of 35%. Next is Marico. The numbers were pretty much in line. Revenue came in at 2240, margins came in at 17.5%, and PAT came in at 305 crores versus a poll of 284. Britannia, it was a solid set. Revenue came in at 4,023 crores, margins close to 20% versus a poll of 17.5%, and PAT at 557 crores. Next is Paytm. The total income was up 50%. It reported an EBITDA positive of 234 crores versus an EBITDA loss of 368 crores same time last year, and the net loss has declined to 168 crores versus 763 crores same time last year. And lastly, Alembic, the numbers were marginally better than estimates. The US continues to be weak, down 18% sequentially. The revenue was flat versus an estimate of a decline of 4%, and margins were pretty much in line, came in at 15%.
Surbhi, thank you so much. So all those stocks will be in focus today. Let me go across to Mangalam now, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So, there was a near 200-point decline on Friday on our indices, and all of that, nearly all of that was contributed by from the HDFC Twins itself. How does that stack up with regards to the flows? HDFC Twins together saw delivery selling worth nearly 4,500 crore rupees. So that is something that, reflected in the institutional volumes as well. The FIs, while they bought about 778 crores in the cash market, the domestic institutional investors sold about 2,200 crores. The FIs, while they've been buying in cash market for the last few trading sessions, they also hedged their positions by selling about 800 crores in index futures, added about 10,000 short contracts, as a result of which their longs are around 45%. But the big data point on Friday was the action that we saw in index options. The data suggested nearly 20,000 crore worth buying in index options. And now while there was purchase of close to 5 lakh call contracts and 2 lakh put contracts, there was 4 lakh calls written. That's nearly, 4 times the calls written for puts written. And that's telling you that at higher levels, we will face a fair amount of resistance. What are those higher levels? The SGX Nifty is indicating a positive start. Does that mean that we see a big, up move thereafter? Perhaps not, because 18,200 has nearly 1.2 crore shares outstanding. So that is something we'll be watching out for. A lot of writings seen out there for a premium of 44, 45 odd rupees, telling you 18,200 to 18,250 will see some resistance. 18,100 call writers were pretty active as well for a premium of 85 rupees. So as soon as we cross that 18,150 mark, we may see some resistance. However, at the lower levels, 18,050 to 18,000 are important support zones, because that's where the put writers are active for a premium of 90 odd rupees. So short point, 18,000 to 18,050 is a support, 18,200 to 18,250 is a resistance, and the Nifty put call ratio, which was at higher levels at 1.35 in the previous trading session, has now moderated to 0.85. Remember, when it goes below 0.7 is where we start seeing oversold conditions in the market.
Okay, take that point. Thank you, Mangalam, Surbhi and Ekta, for joining us, prepping us up for this trading day ahead. We'll step into a break now, and up next we review quarterly earnings coming in from Coal India, Marico and Britannia as well. Stay tuned. Welcome back. Still tuned into Power Breakfast on CNBC TV 18. Let's get you some updates on the earnings that we are tracking this morning. Came over the weekend. Coal India posted a mixed set of Q4 earnings. We have Nigel here with us with all the details. Nigel, what did the numbers look like?
Well, it was a mixed actually. Just to give you an example, your input costs are going up, but you're not getting those salary hikes, right? So that's precisely what's happened for Coal India. Out here, what was impressive, though, is their top line. So the top line was a bit of a beat out there. And that's because of the other operating income was up by close to around 9 to 10%, both on a sequential basis as well as on a year-on-year basis. The blended realizations, quite impressive out there for a company that's not yet got that FSA price increase. It was up by close to around 13%, came in at around 1,877 odd. Remember, some on the street were closer to around 1,830. So that's a 40-50 rupee beat in terms of a per ton cost. And that's because FSA prices, remember, they haven't yet come through, the price hikes, but yet the FSA realizations per ton have gone up by close to around 5%. Telling you that the mix is improving. They're selling more amount of this FSA sales to the non-par segment, which gives them a little better, realizations out there. E-auctions, on expected lines, volumes are lower, but those prices remain elevated. But that's going to be a challenge going ahead because we know global coal prices have cooled off big time. The reason for the EBITDA miss, both on the absolute number as well as the margin miss, is because employee costs surged up. And that was up to around 17,000 crores odd. 5,900 crores were on the back of a wage provision for wage revision. Now, we need to see the trajectory going ahead because that clearly hurt the margin picture. That's what resulted in a profitability miss as well. Coal India, they'd already declared close to around 20 rupees 50 paise earlier as dividend. Now, they've added on another 4 rupees, so that's good. And the key trigger, though, for the stock from here on is going to be, can we hear about that FSA price increase? If that's the case, it'll be good because input costs have gone up. But the FSA prices, which is 85% of their volumes, haven't really gone up. So expect the stock to open up a little bit on the red, but I expect a bit of a recovery because most of the street will treat it as a bit of a one-off. Back to you.
Okay, take that point, Nigel. Thank you so much for explaining what really went ahead with Coal India this time. So let's stay with the earnings. FMCG companies Britannia and Marico also reported a good Q4 numbers. Manglam is here with the analysis. Manglam?
Well, for Britannia, it was like the biscuit. The most of the cream was in the middle itself. We saw solid margin performance. Well, if you just take a look at the revenues of the company, 4,023 crores. The street was working with a number of 4,050 crores. So largely in line out there, if it all, a mild below what the street was working with. But the company more than made up for that by its EBITDA, 800 crores versus expectations of 705 crores. And the net profit coming in at 557 crores. Most of the street were working with a number sub 500 crore itself. What is it that led to this sharp expansion in the margins? Gross margins. They came in at 690 basis points higher than the same time last year, 120 basis points higher quarter on quarter, and they are at an all-time high itself. The domestic volume growth of the company was just 1% as against street expectations of 4 to 5%. But the company explains this by saying that, a large part of that was because of lower demand for low unit packs. We have seen weakness out there. And secondly, grammage reduction. So the same biscuit that was available at 10 grams last year is now available at 7 grams. So that's impacted volumes as well. But the number of packs that sold were up by 12%. So no real worries out there as well. The other big trigger for Britannia is that non-biscuit portfolio grew about 1.5 times faster in the previous year, with brands like Croissants and Winking Cow crossing that 100 to 150 crore mark itself. Another positive trigger is Varun Berry's reappointment. Now, as far as Marico is concerned, the results were largely in line with street expectations. The company said that, they expect improving domestic volume growth and revenue growth trajectory. The gross margins and EBITDA margins are likely to improve as well. So despite inline set of numbers, the internals were good, and at the same time, management commentary was great as well. So see the stock in the green today.
Okay, all right. So that is about the FMCG space. Thank you, Mangalam, for that. We'll slip into a break now, and up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. It's time to talk commodities now. Manisha Gupta is joining us with all the update from that space. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, we have posted 3 weeks of losses in case of crude oil prices, but right now we seem to be stabilizing. Actually, on Friday as well, we saw 4% of gains, but for the week, we were still 7% on the weaker side. The major point being that we are trading above $70 a barrel for both the crude varieties. We did see those levels breach as well in the previous week. While the strong U.S. non-farm payroll data that came in on Friday is supportive, the markets will keep an eye now out on the U.S. Consumer Price Index that comes on Wednesday. But even before that, you have the China trade data coming in on Tuesday and the inflation numbers on Wednesday. So the next 3 or 4 days are data heavy from US and China, and the street will take cues from that. In the metal space, we have seen pressure just about continue. The copper is trading at a 4-month lows. The Chinese premium have dropped because of in the physical availability there. The iron ore prices is a major casualty. We're trading at a 5-month lows on this. We have seen 110 also break on the lower side here. There is low demand from the China steel makers, and because of the manufacturing sector contracting in China and US, that really seems to be weighing on most metals today.
Okay, all right. That's the update from the commodity markets. Thank you, Manisha, for joining us with that. Let's move on now to some national news. Over 23,000 people have been rescued from conflict-hit areas in Manipur that has seen ethnic clashes spiral over the last few days. The evacuees have been moved to operating bases. At least 52 people have been killed after violence broke out between ethnic groups on May 3rd. According to authorities, the Army and the Assam Rifles have also significantly stepped up aerial surveillance to contain the crisis, deploying UAVs and helicopters. Okay, this is a developing story. We'll keep getting you more updates on this one. But with that, we'll take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating a higher start for our own markets. Stay tuned. Bazaar Morning Call comes up next with all the updates.